So as a trader, how you mentally process what a loss actually is kind of defines you as a trader. Good traders know what losses are and what losses aren't. Losses aren't bad luck. They're not necessarily the universe or God, working against you. It's not the man working against you or these evil algo traders that are sometimes screwing you over, at least in your head. No, losses are just a normal part of trading. That's what good traders realize. Losses are a necessary part of trading. They have to happen. Losses have to happen. If you don't ever experience a loss, that means you're trading a strategy that wins 100% of the time. And if you're trading a strategy that wins 100% of the time, you're not actually trading, because nobody's ever going to pay you to do something that is totally risk-free. Because if you have no chance of losing, who the hell's going to pay you for that, right? The purpose of trading is to take risk. And to take risk, if you take risk, you get paid for the amount of risk you take. Naturally, when you take risk, there has to be a potential downside. You have to have some losers. But the point with trading is to make sure that when you're taking that risk, you're getting paid a little more to take that risk than what you probably should be. For example, as an options trader, I know that when I sell options, most of the time implied volatility overprices those options. It overstates the risk of those short options. So I'm actually receiving more premium on my short options than what I really deserve if you take a look at the historical volatility of these trades. So that is kind of an edge we have as option sellers. That's a real edge. And because I know that edge exists, as long as I keep doing the thing over and over again, I should come out ahead in the long run. And there are certain option strategies that you can go back test, and we just know these strategies on these particular underlyings work. For example, we know that selling puts in ES or MES, the S&P 500 futures products, we know just selling puts on these things work. As long as you manage your risk properly, you don't get too big, but selling puts is a winner. It has positive expectancy. If you do it over and over and over again, hundreds of times, thousands of times over a number of years, you're going to make money. It's guaranteed. It's almost 100% guaranteed, as long as you don't blow up your account by taking too much risk. Same thing with SPY, another S&P 500 product. Selling short puts works. Selling put credit spreads over and over again in SPY works. We can actually go test some of this. Again, if you run a back test, let's run a 5-year back test here inside the TASTYTRADE platform. And let's sell a 10 delta put every 90 DTE, right? And let's sell one every week. Let's do one every Friday. Let's exit the trade at 21 DTE, and let's take profits at 50% max profit. Let's run the back test. And again, anybody that trades, we know these strategies, they just work. They definitely have positive expectancy. You can make a lot of money on this as long as you don't take too much risk to where when a downturn happens, you blow up your account. But if you stay small and just do these small trades over and over and over again, this strategy just works. You can see that's a positive expectancy, really nice P&L curve. So the gray line here is SPY, its share price. It's what its stock chart looks like. But look at the orange line for the short put strategy on SPY every week. It's very, very smooth, right? There's no real jog up and downs. You're not getting whipsawed all the time. If you were holding shares of SPY or doing long options like buying calls on SPY, then you're going to get that gray P&L line where it's up big, down big, and that is very tough as a trader to handle those kinds of huge P&L swings. But the short put strategy, it's just a money printer. It's a slow and steady wins the race kind of strategy, but again, it makes a significant amount of profit. Now, in the 5-year back test, let's go into the details. There were 239 of these trades. 235 of these trades were profitable. That means only 4 trades lost. That's great, but again, you never can trade something that has a 100% win rate, because if it has a 100% win rate, there's no chance of you ever losing. Nobody's going to pay you to take that risk. So we did have to take some risk, and you can see the 4 losses, they're big losses, right? Again, you got to take the L on occasion, right? But these 4 losses, yeah, they were big losses, but we more than made up for it the 98% of the time that we actually won on this trade. So as a trader, When I know that I'm trading something that has a positive expectancy, like selling puts on the S&P 500 products, or selling put credit spreads on the S&P 500 products, or even a long option strategy like buying calls on the S&P 500. Now, its P&L is going to wildly swing, but you should come out ahead over time. You're just going to have a lot bigger P&L swings. But if I know I'm going to come out ahead on any of these strategies, I don't really worry about the losses, right? The losses are part of the plan, right? If I know I'm trading a strategy, and let's just imagine that the strategy I'm trading has a 65% win rate, right? But I know over time, the P&L is going to be positive, but I'm going to win 65% of the time. I'm going to lose 35% of the time. That's a lot of losses, right? 1/3 of the time, I'm going to take a L on these trades. But will I worry about it? Am I going to lose sleep at night over it? Well, if I actually know that in the end I'm going to come out ahead, no, I shouldn't worry about losses at all. The losses are baked into the plan. They're part of the plan. And that's the great thing about being an options trader, is because a lot of the strategies we're running, we know we have positive expectancy. We have real advantages over the people that are trying to scalp Forex, or the day traders, the people that are trying to scalp ES futures and things like that, in just a few minutes, trying to guess direction. We're not doing any of that. Those guys, they're just hoping, right? They're just praying that they can guess the market right. They're flipping coins. As an options trader, I know I have a positive expectancy. And when I know I have that edge and that I'm going to win in the long run, I never worry about losses. I'm actually able to tolerate losses. When I take a loss, I know that loss is a good thing, or at least it's not necessarily a bad thing. Again, it's part of the plan. You got to take some of the losses. Again, if there's no risk in what you're doing, no one would have paid you to sell those options anyway. So, the occasional loss is not necessarily something that you look on and say, man, I hate that happened. As you become an experienced trader, one of the things that changes as far as your mindset is you start no longer thinking about each and every individual trade. It's never about the one specific trade. So you never worry about the loser or the winner, right? You start thinking about trades in terms of like your last 5 to 10 trades, or all the trades you've made over the last week or the last month. Sometimes you look at your P&L over the last month or even the last calendar year or whatever, and it's about a cumulative total of trades over a certain time period rather than that one individual trade. And when you start thinking like that, you never focus on any individual trade, and most of the time then you really don't worry about losses at all. Because when you start thinking about trades as not being the individual single trade you're in right now, but about a cumulative total, then you kind of detach yourself from thinking about each and every trade that you're in currently, right? You no longer are worried about those positions because they're just a small part of the overall plan. Really, what I'm trying to say is that, when you know that losses are baked into any strategy, there is a certain percentages of losses you have to take for this strategy with positive expectancy to actually play out properly. You don't worry too much about the losses. The losses become an integral part of your trading, right? You've got to actually learn to take those losses in stride, and you have to realize that losses are really just an expense of trading. They are the expense of trading. They're like a fee you have to pay. You have to occasionally pay a fee in order to trade this profitable strategy. In some ways, losses are an expense the way, when you run a business, you have certain expenses, right? So when you run a business, what are your expenses? Well, your expenses could include things like rent for the property or the office you're in. It could include rentals for cars. It could include services, cleaning services, your phone. It could include paying employees. It could include paying insurance costs, things like that, right? You have a lot of real world expenses for most businesses that you run, right? You have a little bit of upfront costs that are an expense as part of running that business. It's the same thing with trading. Trading is a business, and there are expenses with that business. One of the expenses, the most important one, is losses. And the cool thing is when you start accepting that a loss in trading is really just an expense, it kind of takes the sting out of that loss. You no longer think of it as a bad thing. And that was just a bill, a monthly bill that you have to pay. And that's all that loss is. I really feel sorry for a lot of new traders because they tend to dwell on their losses. And when you dwell on a loss, you end up taking that pain. You take that pain, you internalize it, right? You have all that pain, that agony, that torture, and at some point you just have to accept the loss and move on, because if you're constantly internalizing that pain, you're just taking it all in, it's going to destroy you. It's going to destroy you as a trader. It could destroy you as a person. And if I'm being brutally honest, and typically I am brutally honest on this channel, when it comes to trading, only losers fear losses. Think about that. Only a loser fears a loss. Winners understand what losses truly are. They're that expense of trading, and they have absolutely zero fear of losses. One of the things that you need to understand is mindset is kind of everything, not just in trading, but in life, because typically the things you think about, the things you dwell on, those are the things that kind of manifest themselves in life, right? If you're constantly thinking about losing at trading, guess what's going to happen? You're going to lose at trading. The internal, right? Your internal thoughts and feelings, the internal tends to manifest itself in the external being the world. So quit thinking about those losses, quit dwelling on them, quit taking them personally. A loss is not a personal affront to you. Don't think of the market did something specifically to you to get you, right? You're taking things way too personal. Detach yourself. Remember, this is just a business. Trading is the business. Losses are the expense. And if you're scared to death of taking a loss, you're much more likely to end up taking that loss, and you're probably going to end up taking some rather huge losses, because if you're scared to death of taking a loss, chances are you're not trading proper strategies, you're not trading proper sizes, you're trading way too big, you're trying to hit a home run, you're doing some crazy things. If you're worried about losses, typically that's a sign. If you're worried about your trading, that is a sign that you're doing something wrong. So you need to actually address that problem. Whatever that problem is, you need to address it right away, because if you don't, it is going to bite you, and you're going to end up blowing up your account. You're going to get put out of the game. And guess what? You can't be a long-term successful trader and actually make money in the long run if you're not playing the game. So if you get put out of the game, game over, right? So the point of staying in the game is never take too much risk. Don't do anything too stupid. Don't get too big. Don't trade penny stocks. Don't trade meme stocks. Don't buy into a lot of the fake guru bullshit on YouTube trying to day trade futures or Forex, trying to scalp things. There's plenty of options trades. There's plenty of options trades that have positive expectancy that you're guaranteed to make money if you just do them over and over and over again. Some of the strategies I talk about on this channel, those of you that hang out with me on the DT Options Discord server, I often talk about various strategies and various products that just work, right? And all you need to do is just make sure you stay small in size, never take too large of an individual position size in anything. So, a couple of bad trades don't put you out of the game. But if you trade responsibly, this is actually rather easy, and it shouldn't really weigh on you emotionally. Now, if you want to learn more about my favorite option strategy, check out my book, The Super Wheel Option Strategy, which is available over on Amazon. You'll find a link to my book in the description below. Also, come join us over on the DT Options Discord. I hold a live voice chat there in the mornings, each and every trading day, and we've got a nice little trading community. I share my screen. You guys get to see all of the trades I made, my opening trades and closing trades. You get to see some of these rather easy option strategies that have positive expectancy that you guys get to see me do them over and over and over again. So check out the DT Options Discord. All right, guys. Peace.